Hey there, traders. Todd Gordon of TradingAnalysis.com. Hope you guys had a good ECB day. It was wild. Obviously, the euro's breaking away. We see lower levels in the euro, continue to strengthen the dollar. And that's actually going to be part of the focus of the free video tonight, the dollar, but not against the euro. I want to look back at the yen. We did a video last week sometime talking about the dollar's relationship to the S&P. And I don't know why, but you guys really liked that video, which I appreciate. I got a lot of likes on that and a lot of emails and tweets and everything saying you really liked the video. So I want to follow up on it, not because I want to bring back up a fun video, but because it's actually still holding. So the relationship between the dollar and the S&P continues. So here's the video from, when was it? The 11th. Wow, that was a long time ago, more than a week ago. Shut up, Todd. Okay, so that's the overlay that we talked about. That is the dollar yen. Let me go to the S&P first. We're looking for the S&P to move from like 2060 down a little bit, down towards 2000 area, okay? So let's just revisit the analysis. This is the updated chart, S&P cash on dollar yen spot. And you can see that, you know, since October, they've been really tight. I mean, right on top of each other. So the dollar is certainly tracking the S&P. The better the S&P does, the more likely the Fed is to begin raising rates, which that's really the whole reason the dollar's rallying, is raising rates as well as the end of bond purchases in the U.S., which Europe kind of picked up where we left off, and they're doing 60 billion euros a month, which is 1.1 trillion in the whole package, which as Draghi said, is open-ended. So that is not going to be all of it until they can get 2% inflation, which Japan is still working towards. They'll still keep buying them. So anyways, the relationship is higher dollar, higher S&Ps, because the U.S. is likely to raise rates first. Okay, so let's do the analysis first on the S&P. So let me pull the wave analysis back in, and there it is. S&P broke out today, which was pretty cool. Okay, we've been watching these massive back and forth ranges for a good period of time. We saw this as a B-wave triangle. The break was 2042. That was the key level. That's the level that we had our clients focused on. That was the do or die level. So that was broken. We thought about holding it yesterday here, but we eventually broke through. So what you'd like to do if you're an S&P trader or a stock trader, just using those indexes to set up your stock trades, is to wait for a pullback towards 2042 in this blue wave 4. This is of the same degree as this blue wave 2, which I believe it was about 30 handles or so. So you're looking for a similar pullback in wave 4, which should hold support at 2042 and then move up in wave 5 towards 2080. So this is a strong break. This is a wave 1 of a higher degree 5-wave move. Uptrend in stocks continue, and we've continued to be bullish stocks. We've stayed bullish with clients the entire time. We've had long positions through this entire massive, like just tear-jerking volatility back and forth that really didn't go anywhere. Okay, so that is a good topside break. Going over to dollar yen, and again, just kind of revisiting where we were on this chart, we were tracking this dollar yen chart way back here about 11 days ago, looking for a C wave drop in dollar yen from about 118.5. And that C wave drop from 118.5 happened down towards about 116. And then those of you who know Elliott know we're in a triangle, which means we need 5 waves, which means we have one more rally. This is the 4th wave, which is your D wave. And then the 5th and final E wave, which completes the A, B, C, D, E triangle consolidation that you guys all know. Elliott assigns values to when it should start and stop. So we should have one more push up. I wouldn't chase it. One more little failure down, and then I think dollar yen it completes wave 4, and then it'll join the S&P top side through the higher 120s. Okay, so we'll leave it there, guys. This video was of interest or use to you. I really would appreciate it if you give it a like. There's a lot of content out there on YouTube, a ton of content since I've gotten it. I had no idea just how big YouTube is. It's huge. So a like is much appreciated. That helps get this material up. There's a lot of good content out there on YouTube. So a like is appreciated. A subscribe is even more appreciated. And I just love doing these. And thanks for the previous comments and likes. And I have no TV tomorrow. I'm off. No CNBC tomorrow. So I will be banging away here tomorrow. All right, guys. Good luck. And and talk to you soon.